record. As we take a look at this diagram, and we said that the main objective is to maximize shareholder value. We look at the investment performance and the financing performance of the firm. So we say that this, in order to answer these questions, it is important that the firm come up with metrics or measures. So the metrics are, that's the purpose of financial ratios. Okay. For example, in order to determine, to answer the question, is the firm able to maximize or optimize shareholder value? We can make use of this metric called MVA, market value added, or market to book ratio. Okay. In terms of investment, is the firm able to generate projects that add value to the firm? Okay. So aside from the fact that each project should be evaluated using IRR or NPV, we also look at the overall performance of the firm using EVA, economic value added, or other financial ratios like return on capital, return on assets, return on equity, return on invested capital, return on net assets. These measures we're going to look at in this module. And of course, the financing, as far as financing is concerned, okay, how is the firm able to grow its assets? How fast could the firm grow by plowing back earnings? So this is also related to dividends, okay? So we have a measure called the sustainable growth rate, okay? And this, guys, as far as investment is concerned, there are two important questions that need to be asked. How efficient is the firm in using its assets? So how are we to answer this question? We can answer this question by looking at certain ratios, like turnover ratios for assets. We call it inventory turnover, receivables turnover, okay? And also we look at the profitability of the firm based on operating profit margin. Okay, so these are two important questions that deal with investments. And then as far as financing is concerned, we have financial leverage. The debt ratio, we know that capital structure or capital mix is all about the right mix and the right match, okay? Right mix in the sense that how many percent of the firm's assets is financed by debt? How much is financed by equity? Is this the optimal capital structure? Okay, and then we mentioned also that a part of financing is acquisition of funds. But so is the firm able to acquire funds? Is it liquid enough in order to sustain its operations? So how are we to measure this? We have current ratio, quick ratio, cash ratios. Okay, so in order to assess the firm's performance, okay, we look at these ratios and other financial ratios. Now, we don't look at it just for one period, okay, because we have to benchmark the firm's performance against two things. Benchmark it against time. In other words, is the company's performance this year better than last year? So we have to look at the previous periods and see if the company has been able to progress or to improve its operations across the years. But not only benchmark against time, so there are two benchmarks here that we're going to look at and discuss. It's also benchmarking against their direct competitors, okay? Because a company does not operate in a vacuum, okay? So a company, it belongs to a particular industry, and the company needs to see whether its operations, its performance is at par with regard to their direct competitors. We might say, wow, the current ratio of the firm is 2. That's good. Okay, but its direct competitor has a current ratio of 2.2. So is that good or bad? So we have to take a look at these things. So the two very important things: benchmarking against time and benchmarking against a direct competitor. Okay, so these are two things that we're going to look at in this chapter. Okay, so I'm just going through the chapter, guys. Okay, so here in 28.2, we look at financial statements. So what are the three, let's say 5 most important financial statements as far as a company is concerned? Anyone, please? So I'll use our Excel sheet. Okay, this is the Excel sheet that I shared with you. Yes, yes, Robert, kindly please.
First would be the balance sheet.
Yes, thank you. Yeah, you're correct. Let me just for a while. Let me just access my digital pen. Start inking. Okay. All right. So we're looking at the financial statements. Okay. Financial statements. So we have the first one is the balance sheet. And then
the next one po is the cash flow, a cash flow statement.
Okay, number 3 is a statement of cash flows.
And number 2 is income statement.
Okay.
Sorry, I
Cash
skipped number
flows.
2.
It's okay. Thank you. Income statement. Okay. Number 4. Okay. Thank you. Sorry, was that Robert?
Yes,
Robert, no, thank you so
Robert.
much. Okay. Anyone else would like to add? Thank you, Robert, for your answers. That's correct. What do you think would be number 4 and number 5? Number 4 is statement of
shareholders' equity, sir.
okay, shareholders' equity. Okay, statement of changes in shareholders' equity. Okay, and lastly, guys, although these are not quote unquote formal financial statements. Yeah, yes, Robert, you raise your hand again.
Oh, I forgot to put it down. Pero
okay.
Can I try?
Yeah, sure, go ahead.
Is it closing entries?
Sorry, closing entries. Closing entries is a process used in generating financial statements.
Oh,
okay.
Oh, yeah.
Thank you, Robert. How about Melvin? Would you like to raise your hand, Melvin?
Yes, sir. Sir, notes to financial statements.
Yeah, thank you. Thank you, Melvin. And thank you also for the 2 others that raised their hands. I guess that's also your answer. No? Okay, so we have notes to the financial statements. Okay, so briefly, guys, let's. This is not an accounting subject. Okay, we're going to use the outcome generated by the accounting process to analyze a firm's performance. So what's a balance sheet, guys? What does this tell us? Very quick review lang, guys. The balance sheet tells us of the... Yes, Robert?
Basically, the balance sheet tells us like the available resources of the available assets or resources of the company.
Okay, thank you. Assets and resources of the company. Okay, thank you. That's correct. Okay. How about Beyonce?
Sir, it reports a company's assets, liabilities, and the shareholders' equity as well.
Okay. So you're just like Robert, you're identifying the composition of the balance sheet: assets, liabilities, and equity, right? Owner's equity. So the balance sheet, guys, tells us of the financial what? Blank at a specific what? Blank. Okay, there are some who raise their hands. Let's see. Yes, Beyonce. Beyonce, did you raise your hand? Or kanina pa to? Okay, would like to answer this, guys? Any venture? Okay, let's see. Beyonce, yes?
Sir, is it financial performance?
Financial performance. Okay, thank you, Beyonce. But financial performance is more of the income statement.
Oh, okay. Sorry,
so, sige, thank you. But thank you, Beyonce. I think Angelo was next. Angelo?
Position po.
Financial position. Okay, yeah, you're correct. Thank you, Angelo. And Robert, was that also your answer?
Yes, sir.
Okay, thank you,
Yeah.
thank you. Okay, so it's financial position, no? Position at a specific what? A specific, yeah, yes. Sorry, yes, Beyonce.
Is it specific period of time?
Okay, specific period of time will be for the income statement. Okay, who was the other? But thank you, Beyonce, for your answer. Who was the other one who raised his hand? Okay, yes, Edgardo.
Hello, sir.
Yes.
Can you hear me well?
Yeah, I can hear you. Thank you so much.
Is it at a specific point in time, sir?
Yes, correct. Okay, point in time. Okay, yung answer kanina ni Beyonce, it will be here, no? Okay, so sulat na lang natin dito, no? Specific a period of time. Okay, so that's a difference. That's one difference between the balance sheet and the income statement. The balance sheet tells us of the financial position at a specific point in time. Okay, well, the income statement tells us of the financial. I think this was also mentioned by Beyonce also. Financial performance, no? Financial performance at a specific period of time. Okay, so this is just a review, guys, of your financial statements which you had in your accounting subjects. So you're correct. The balance sheet, in the balance sheet, we can find here the assets, the resources owned by the firm, and how are these assets financed? Liabilities and equity. Okay, so these are what we can find in the balance sheet. On the other hand, the income statement gives us the revenues, okay, the expenses, the operating profit, and the net profit of the firm for a specific period of time. Okay, so that's why in the balance sheet you will find there, for example, the heading as of December 31, say 2021. While in the income statement it's for the period ended, like that, for the year ended. So that's the difference between these two statements. Okay, so we won't go too much into the detail of this because you have had already subjects that generated the balance sheet and the income statement. Okay, how about the statement? By the way, how is the income statement? How is the balance sheet arranged? Is there a way by which the balance sheet is arranged? Anyone, guys? What does GAAP dictate? The generally accepted accounting principle. How is the balance sheet arranged? According to letter L. Anyone? The balance sheet is arranged according to okay, that's the clue there. Anyone, please? According to, this is why here. Yes. Okay, let me see. Angelo?
Sir, liability po.
Liability. Okay, liability is part of the balance sheet, no? Pero it's not the way the balance sheet is arranged. Okay, but thank you so much for your answer. How about Robert?
Is it liquidity, sir?
Yes, okay, thank you. It's liquidity, no? So we arrange the balance sheet is arranged according to liquidity. What does liquidity mean? Ano ba ibig sabihin ng liquidity? How liquidity is closeness to what? To? Yes, okay. Sorry, I have to. Justin, yes? Liquidity is close to?
It's close to the liquidation of your assets po.
Okay, liquidation of the assets. So if it's liquidation of the assets, okay, then it must be related to something. When you liquidate the assets, you're converting it into what?
Cash.
Yes, cash. So when we talk of liquidity, we're talking of the closeness of the asset to cash. Okay, how easy is it to convert the asset to cash? So this has something to do with its closeness to cash. Okay, so if we take a look at the balance sheet, how is it arranged, guys? Okay, you cannot just create a balance sheet according to our whims. No? You cannot just say, okay, I'll arrange it according to this or this. There are standards that need to be followed. So what's the order of presentation in a balance sheet? 1, 2, 3, 4, 5. Okay, number 1 is, guys? Yes, Justin? Justin?
Ay,
Okay.
sir, I didn't raise my hand for that
Okay,
one.
so, sorry, Justin. Edgardo, Ed? Did you raise your hand?
Sir, you list first the assets of your the current assets.
Okay, thank you. Current assets. Okay, first, okay, sorry. Let's identify first the assets. Okay, so we're talking about the assets of the firm. You're correct, Ed, it's current assets. And then what's next? Anyone? How about Robert?
The non-current assets.
Non-current assets. Okay, so non-current assets too. So let's identify the non-current assets. What's the next one? Current assets, and then
The property, plant, and equipment.
PPE. Okay, that's number 3. PPE, property, plant, and equipment. Okay, so what's the second? What's the third? What's the fourth? What's the fifth?
Land.
A land is part of PPE.
Oh yeah, sorry.
Yeah. Anyone, guys? What could be the second one? Current assets, and then there's a second one, and then PPE, and then, okay, so this is L, this is I, this is O. Yes, Robert, please. What's L?
Sorry, I forgot to lower my
Okay,
hand.
sige. Chiron, you were raising your hand.
Long-term receivables, sir.
Long-term receivables, okay. Not long-term receivables, but rather it's long-term I. What's I?
Investments.
Yeah, long-term investments. Thank
Yes.
you. Thank you, Chiron. Okay. Who'd like to answer letter I, guys? Yes, Chiron? Okay. Sige, anyone? I, guys? Example nun, goodwill, brand, patents. Okay. Yes, Robert?
Is it intangible
Yes.
assets?
Yes, correct. Intangible siya, no? Intangibles. Okay, and the last one, this one is okay, other assets. Okay, other assets. Okay, so this is how the assets is arranged in the balance sheet according to liquidity. Pero yung CA, guys, current assets, there are 5 major main classifications there. What are the main classifications for the current assets? Yes, Robert?
Is one of them cash?
Cash, the first one, cash. Okay, also arranged according to liquidity. Okay.
Is it the next one, accounts receivable? Or receivables?
Okay, that's the third one, receivables. Okay, Ed, would you like to answer? Thank you, Robert.
Inventory, sir.
Inventory, okay. Where do you put inventory? Here?
I think isn't inventories one of the last, sir?
Yeah, the fourth one, that's inventory. Okay. You have, so we need the second and the last. Okay. Robert, I'll call Angelo first. Huh? Angelo?
Sir, cash equivalents po yata yung second.
Okay. Cash or cash equivalents number one yan. Cash and cash equivalents. Okay. Thank you, Angelo. Iana?
Sir, short-term investments.
Okay, that's number two. Short-term investments, or what's another name for that? MS? I don't know if you met this in your accounting. MS is? Angelo, your hand is raised. Okay. Thank you, Yana, for the short-term investments. Robert, what's MS?
Oh, I was about to like answer prepaid expenses.
Okay, sa dulo yan, no? Ito yung prepayments. Okay, thank you, Robert. You're correct. That's the last one, prepayments. Okay, and anybody would like to answer this, the second one, short-term investments or Iana? MS? Ano ba yung MS natin?
Marketable.
Yes, correct.
Security.
Marketable securities. Thank you, Yana. That's correct. So this is how your balance sheet is composed. Okay, it's arranged according to liquidity. So what this tells us is that there are certain rules by which accountants generate the balance sheet. Of course, from the liability and equity side, we have, of course, it will be, let's just enumerate it very quickly. Okay, it will be current liabilities, okay, non-current liabilities, okay, that will be your total liabilities, right? And then okay, so how about the and then common stock, okay, and then retained earnings, so that this will be our total shareholders equity. Okay, so in a nutshell, that's how your liabilities and equity is recorded in the balance sheet. You have your current liabilities, non-current liabilities, and the total of which is your total liability. And then you have your common stock. If there's preferred stock, common stock, then retained earnings, and then the sum of this will be your total shareholders equity. Now we know that the total liabilities plus total shareholders equity should equal your total assets. Okay, so that's the basic accounting equation. Total assets is equal to total liabilities plus the total shareholders equity. Okay. All right. So quickly, the income statement, it tells us of the financial performance of the firm at a specific period of time. So we'll find there the revenues, the operating costs. Okay. By the way, guys, let me just clarify this. Suppose a company, let's say a company buys, let's say bond paper, guys, bond paper, and they bought, let's say 1,000 amount of bond paper. Where will that fall under, guys? Will that form what part of the assets will that fall under? Anyone? Okay, let me clarify that. In bond paper na yan, it's used for the office operations. No? Okay, any answer, guys? Bond paper, guys, used for admin work. Where will that fall under? At the end of the year, for example, at the beginning of the year, there was, you bought 1,000 worth, and at the end of the year, you only have 70 worth. So you used up 930. Anyone, guys? Where will that fall under? Will it be part of cash, short-term investments, receivables, inventory, and prepaid?
Sir,
Yes?
nawala po yung share screen.
Ah, nawala ba? Okay, wait. Okay, is it on now, guys? Okay, thank you. I
On na
got cut off. Okay. All right. So I was asking you about the bond paper, guys, which is used for office purposes, admin purposes. Where will that fall under? Is it inventory? Okay, the answer, guys, is the inventory, guys, is what we classify as inventory are those that are bought and then with the intention of selling it back or manufacturing it. No? So, pag inventory, if it's a manufacturing firm, you have 3 layers of inventory. Would anyone know what are these 3 layers of inventory? If it's a manufacturing firm? Anyone? Inventory, guys, for a manufacturing firm? Yes.
Is it raw materials?
Okay, so number 1, 3 layers of inventory for a manufacturing firm. No? Raw
Finished
materials,
goods.
then
Work in process.
a work in process, and then
Finished goods.
finished goods. Okay, that's correct. This is for a manufacturing firm. For a trading firm, guys, for a trading firm, it's just inventory or the finished goods lang yon, no? Kasi they, for a trading firm, they do not buy raw materials and convert it into finished product. They buy the finished goods itself, the inventory, and then sell it as is. Of course, they could be changes in the packaging, etc. Okay, but it's still finished goods. Now, the office, the bond paper, for example, will not form part of inventory. Rather, it will be part of prepayments. Okay, prepaid office supplies yun, no? So strictly speaking, when we talk of inventory, these are goods that are bought and then converted into finished goods or sold as is. So that will form part of inventory. Okay, so for example, for a service organization like a barber shop, what constitutes inventory? Is it the alcohol, the scissors? They should not be part of inventory unless, guys, sorry, unstable the internet. Can you hear me, guys? Am I?
Yes po, sir.
Yes, sir.
Okay. Oh, kasi nag-notice, I'm receiving notice that internet is unstable. Okay, as I was saying, guys, if it's a service organization like a barber shop, let's say cologne, the lotion, whatever, guys, whatever, they will only be part of inventory if they're selling it to their customers. If it's being used for the service itself, then that should form part of prepaid, no? Not inventory. Okay, all right, so let's go back to the other financial statements. How about statement of cash flows, guys? What do we know about the statement of cash flows? This tells us of the, okay, Robert, yes, thank you.
The statement of cash flows are basically the reports the inflows and outflows of the cash of the company.
Okay, thank you. That's correct. No? So the statement of cash flows tells us of the, let me write that. It gives us, tells us about the sources and the uses. Okay, sources, saan nanggaling, where did it come from? And uses, where was it used? Sources and uses, okay, of cash from what? From this, and this activities for a specific period of time. Okay, Robert, again, please. So it tells us the
Operating.
sources. Okay, operating.
Investing and financing
Okay,
activities.
correct. Thank you. Thank you so much, Robert. So you're correct. This is from operating, investing, and financing activities. Okay, for a specific period of time. So when you look at the statement of cash flows, you will see there heading sources or uses of cash from operating activities, sources or uses of cash from investing activities, and sources of uses of cash from financing activities. Okay, so these are the three major financial statements. And of course, number 4 is a statement of changes in shareholders' equity. This is a financial. This tells us of the again how the changes as far as shareholders' equity is concerned, and the changes will be coming from the net income, okay, the results of the operations, and then also it will also include how much dividend was distributed to the shareholders, if any. Okay. And lastly, guys, the notes of the financial statements. Okay, so one of your output in this subject is you'll be grouped, maybe groups of maybe let's make it 4 or 5, and then you'll have to generate a financial statement analysis of the company of your choice. Okay, I'll discuss the details of that in the next meetings. Okay, it will be a group activity, that's part of the output of this subject. Okay, so let's now go to the first page of this worksheet. Okay, what we're going to learn here is we're going to learn how to compute FS. Okay, this is financial statements, free cash flow, and the EVA, economic value added model. Okay, so what are we required here? We're required to construct the statement of retained earnings, cash flows, net operating working capital, total net operating capital, net operating profit after taxes in the recent year, the free cash flow, and the ROIC for most. Okay, I think, I'm sorry about this, guys. This got cut. Okay, maybe in copying it. Free cash flow return for the most. Okay, so I think so. Kindly remove this. Control X. This should be here. I'm sorry for displacing. Okay, I'm sorry about that. For the most recent year. Okay, so we have these financial statements of advanced technologies, and these are in millions. Okay, these are in millions of pesos. Okay. All right. So let's quickly take a look at the income statement of advanced technologies. We're given 2 years, 2020 and 2019. Okay, you first have net sales. Okay, so this is it's now difficult to pronounce this. It's 3 billion. Okay. Okay. Am I correct, guys? This is 3 billion. It's 3,000 million, which means when we say millions of pesos, we have to add 6 zeros here. So if we add 6 zeros here, this will already be million. This is million. I know that just add. Okay, sorry, I got confused. 1,000 millions of pesos, then we have to add, yes, we have to add 6 zeros. So if we add 6 zeros, millions, billions, this is already 3 trillion. Am I correct? 88 million, yeah, 88 million, and this is 3 billion, not trillion. Okay, I stand corrected, guys. This is 3 billion. Okay, so when you see here millions of pesos, what you do is to remove the decimal and add, just add 6 zeros after it. By adding 6 zeros after it, then we can read it, that's actually 3 billion. So this company generated sales of 3 billion for 2020 and 2,850 for 2019. But by the way, guys, before I forget, okay, I think I failed to continue with this one. Okay, this 28.2 talks about some standards as far as reporting. So the IFRS, okay, as compared to the GAAP of the US. Okay, so kindly read about this because there was a move in order to standardize the balance sheet, the income statement, the financial statements, because when you go to different countries, they have their own standards. So there was a move, which it actually came from Europe, to standardize the way the financial statements are presented. But I think it reached there was a standstill because the US was not so keen on adopting the IFRS. And to date, I think, so in the last statement here, by 2014, it had become clear that the SEC of the US, SEC's plan to move to IFRS, that's the International Financial Reporting Standards, was effectively dead. And that while the US and the SEC, and IASB would continue to collaborate on accounting rules, there was little prospect of any agreement over a single global standard that included the United States. Although many countries are now adopting the IFRS. Okay, so notable, of course, is the European countries. And in addition, some 100 other countries, Australia, Canada, Brazil, and India. Even China has modified its accounting standards to be largely in line with IFRS. So it's only the US as of 2014. Okay, I'm not sure if there are any changes as far as the adoption of IFRS for the United States. Okay, so let me just quickly go through the other parts, okay, of this of your text. So here, guys, you're given a study of Home Depot's financial statements. Now, we're not going to discuss this in class. Okay, we're not going to use these financial statements because it's already discussed there in your text. So I'll be assuming that you're going to read this. Okay, and unless you have any questions about the discussions here, if you have, please PM me or email me so that I can respond to your questions. Okay, 28.4 is measuring Home Depot's financial performance. Here you have the EVA, the economic value added. Okay, we also have here accounting rates of return, return on capital, return on equity, return on assets. Okay, and here is a discussion on some problems about EVA and accounting rates of return. Okay, so 28.5 is these are now efficiency measures, which we're also going to discuss. All right, and then etc. guys. So kindly, guys, we're going to discuss also the point. Please read the text, and so that we don't waste time. I will not anymore be discussing this. My example will be different from what you have in the textbook. Okay, so that you have one example here in the text, and you have another example in our classroom discussion. Okay, the discussions here are quite comprehensive and they're very good. I've gone through this. Okay, they're very informative. Measuring leverage. And I would want you to read about this. There's an article here, measuring liquidity. Okay, I don't think it's here. Interpreting financial ratios. Okay, so again, there are beyond the pages here, helpful discussions. Okay, I think it's in 28. Yeah, this one, guys, kindly read this. 28-5. Is it better to use average or start of the year assets? This is important reading. So may I request you to please read this when you reach 28-5. Okay, so let me go back to the worksheet that we're going to use. Okay, so here is the financial statements of Advanced Technologies for 2020 and 2019. So first we have the income statement. We have the line items here, net sales. Now operating costs except depreciation and amortization. Now when you subtract operating costs, all the operating costs except depreciation and amortization, we have this term Ebitda. Okay, so Ebitda is earnings before. So this is earnings before interest, taxes, depreciation, and amortization. So this is your Ebitda. Okay, so how do you get the Ebitda? From your net sales, you deduct all the operating expenses, but exclude depreciation and amortization. Okay, take note that interest and taxes are not operating expenses. Okay, so we have this Ebitda. Now, my question is, why do you think is Ebitda being singled out? Why of all the operating expenses, we're singling out Ebitda and not including it in order to arrive, you're singling out depreciation and amortization, and in order to arrive at a measure called Ebitda. What could be the reason for that, guys? Any idea? Any guess? Ebitda. Why single out depreciation and amortization among all the operating costs? Okay, the answer to that is depreciation and amortization is usually singled out because this amount, okay, will be used especially in the statement of cash flows. Okay, the depreciation and amortization are non-cash expenses. Okay, so these are examples of non-cash expenses that are deducted to the net sales. Okay, and then these are very important items when we go to the statement of cash flows. Okay, I'll provide more details when we go to the statement of cash flows, because we're required to construct the statement of cash flows for this problem. Okay, may I ask you guys, did you have a topic in your accounting where you were asked to construct the statement of cash flows? Kindly chat, please. Yes or no, please, guys? I'd like to know if you learned how to construct the statement of cash flows in any of your accounting subjects. Yes or no lang, guys, please chat in the chat box. Hello, can you hear me, guys? Okay, so Robert, yes, did you learn? Okay, Kieran. So do you know how to construct the statement of cash flows? Because if you know already, guys, we can skip that portion. How about the rest, guys? Hello? Okay, all right, since your answer is yes, then I would assume that you know how to construct your statement of cash flows. So that will be part of your assignment for next week. Okay, you will be required to construct the statement of cash flows for advanced technologies. Okay, so I forgot to delete this. I should have deleted this portion. Okay, anyway, guys, you should already know how to construct a statement of cash flows. And then, so I won't teach this to you anymore. Just compare notes. next meeting about your statement of cash flows. Okay, so let's continue our discussion here. So EBITDA, and then we subtract the depreciation and amortization to arrive at earnings before interest and taxes. So we call that your EBIT. Okay, then we subtract interest. Interest is given here, 88 and 60, to arrive at your EBT, earnings before tax. And then taxes, the tax rate used here is 30%. So 30% of 195.8 is 58.7. So you can see the formula here. It's not good to also this one. It's not good, guys, to use absolutes in your models. I'll explain as we go along. Okay, so we have net income. Well, okay, might as well, guys, might as well already discuss this with you. Do you know how to name cells in Excel? Kindly chat, please. Do you know how to use the naming of cells in Excel? I want to see, guys. Okay, after that. No, okay, Beyonce, thank you. Okay, some of you answer yes, some of you answer no. Okay, Joanna, how do you name cells in Excel?
Sir, you have to change yung sa upper right po, there's
Okay,
not
call it the
J21.
name box.
Yes po.
Okay, so thank you, Joanna, you're correct. You can use the name box. Okay, usually, guys, when you model in Excel, do not put absolutes in your figures. Okay, what's the disadvantage of, let's say, a while ago, let me undo this. A while ago, you notice that this is F17 times 30%. The disadvantage of this one, guys, is that if the tax rate changes, then what you have to do is to change this. Of course, you have to change this also. The better approach is that absolutes should have their own place. Okay, I usually put it on the first part of the spreadsheet. Okay, in this case, the tax rate is 30%. Okay, we can give this a name. Okay, we can give this a name. Let's call tax rate as 30% as your tax rate. So in order to give this a name, you see this. Okay, I think I already used tax rate, but anyway. So here, guys, I'm going to, you have to, your active cell should be in the cell which you want to name. So 30%, here I'm going to use tax. I'm going to name it as tax rate. Okay, there should be no space, only one, you cannot use two words. Okay, or you can use tax underscore rate. Okay, so let's use that, guys. So put here tax underscore rate. Make sure that your active cell is pointed at 30%. Okay, and then you have to press enter. If I press enter, okay. So you notice if I go here, this already has a name, tax underscore rate. Note, guys, that all cells in Excel have their specific names. For example, if I go here, this one is H1. That's the label of this cell. This is, of course, I1. This is I3, etc. So originally, this was C18, but I changed the name into tax rate. Now, what's the purpose? What's the use of that? Okay, so that when we use this, is equal to 195.8, and then multiply that by, what I can do is use the name that we gave to this cell. Okay, so I know the name of this is tax rate. If I type letter T, okay, notice that it gives us the different functions in Excel together with the name. Okay, so this is the name we use, right? TA. Okay, so here tax, and then we only have two. In fact, guys, when we press T, you could have just click this. double click it, and then you have their tax rate. Okay, Control Enter. And then you can copy this here. This will also give us tax rate. So we're fixing, when we use that name, it's already fixed. So you can copy it anywhere. The advantage of using names, guys, for specific cells is that if you're in any other cell, for example, I want to access that, I want to use the tax rate, you can just type is equal to T, okay, and then you can access that anywhere. Double click, and that gives you the 30%. Okay, so that name is reserved for that specific cell, that 30%. You cannot, of course, use names that are names of cells, cell addresses. For example, you cannot use as a name K11 because K11 is specifically the name of this particular cell. Okay, for as long as the name of the cell does not conflict with any of the cell addresses here, then we're okay. Okay, there's a question. When will be the deadline for the assignment? It will not be collected, guys. It's an assignment where if you do it, guys, you benefit because you learn how to do it. So what we're going to do is just we're going to compare our answers. Okay, we'll just compare our answers as far as the statement of cash flows for this company is concerned. Okay, and I don't know how you were taught. How were you taught, guys, how to construct a statement of cash flows? Did you make a template like this? Okay, because when I teach how to construct a statement of cash flows, I always I do it this way. Okay, because for me this is the best way to construct a statement of cash flows. I don't know how your teachers taught you how to construct a statement of cash flows, but be that as it may, okay, we'll just compare our statement of cash flows next meeting. All right. So any questions about using names for particular cells? Okay, so here it's also intuitive as compared to just C18. Okay, so it's best, guys, for absolutes, for example, for constant, for example, tax rate. Tax rate anyway does not change usually. Okay, so you can in your model, in your Excel spreadsheet, you can have a what I do is I have place. It's usually color filled for absolutes, so that I give names to those absolutes, so that I can use that in my model. So when I change, for example, a while ago we used 30% here. I type 30%. Okay, when the tax rate changes, then I have to change each of them, each and every one of them. But here, guys, if I'm going to change this, if this changes, for example, into 35%, automatically, guys, everything changes here because this is linked to your tax rate, and your tax rate is 35% this time. Okay, so that's the advantage. Any change in that absolute, if you're using that, okay, if you just change this, then everything in your model will change. Those cells where you use that specific name will also change accordingly. Okay, so any questions, guys, as far as the name range is concerned? Kindly chat, please. Is it clear so far? Kung yes, guys. Okay, thank you. How about the others? Okay, good. Okay, so moving on, guys. From the net, after we subtract the tax, okay, we have the net income. Net income after tax, or this is oftentimes called, others call this earnings after tax or net income after tax. Net income. Okay, so that's earnings after tax or net income after tax. Then from here, guys, from the net income after tax, we determine whether how much is distributed as dividends and how much is flowed back to operations. Okay, so this is 57.5. And how much was the dividend payout ratio? How much was the dividend payout ratio? So the dividend payout ratio was 57.5 divided by the 137.1. So it was around 42%. Okay, of course, this should be equal to this one divided by the net income after tax. So the total, guys, of the 100% pie of the net income, around 42% was distributed as dividends, 58% was flowed back to the operations. It was addition to retained earnings. Okay, clear so far, guys, with the income statement? Okay, no questions? All right, let's go now to the balance sheet. So you have this component. This is your current assets. You have your total current assets. And then your net plant and equipment. Okay, you don't have long-term investments. We don't have intangibles. Okay, and we don't have other assets. So these are just the assets. Two main categories. You have your total current assets and your property, plant, and equipment. So for 2019, the total assets was 1680. Then it increased by 320 to 2 billion in 2020. Okay. Notice, guys, that in the balance sheet, I'm just using one decimal place. For our purposes, that will be fine. Okay, then we have the liabilities and equity. You have here total current liabilities. Okay, and then we have long-term bonds. This is long-term liability. So the total debt is a combination of your current liabilities and long-term liabilities. The financing, as far as equity is concerned, you have common stock. Okay, there are 50 million shares. Okay, then you have retained earnings. Then the sum of this common stock and retained earnings is your total common equity. Okay, so when we add the total debt and the total common equity, we have the total liabilities and equity, and it should equal the total assets. Okay, so as we said, guys, the balance sheet tells us, it tells us of the financial position of the firm, or financial standing. Financial position or financial standing at a specific point in time. All right. So now, guys, the requirement is for us to construct the statement of cash flows and the statement of, let's change the statement of retained earnings. Let's make this statement of changes. Statement of changes in shareholders' equity. Okay. All right. So for this one, guys, for the statement of cash flow, since you told me that you already know how to construct one, I'll leave that as an assignment. Next meeting, guys, I'll just show you the template for doing the statement of cash flows. I don't know if you learned this. However, the main output should be this one. Okay. In fact, I forgot to delete this. Okay, you should have been the one to construct this, but anyway, it's there already. Okay, so let's now go to the computations here of some important measures. You have NOWC, you have TOC, and you have investment in TOC, and then you have NOPAT, free cash flow, okay, and then ROIC. Then we have MVA and EVA. So quite a lot of measures here, guys, in this worksheet. Okay, so let's start, guys. First, we need to compute for the net operating working capital. Okay, so there are authors use working capital, define working capital differently. No? So some would say that working capital is equal to your current assets. Okay, I've seen definitions like that. Working capital is equal to current assets. So we have the net working capital. Okay, the net here refers to, net is current assets minus current liabilities. So this is net. Okay. Now what we're interested in this discussion is NOWC. So what's NOWC? It's net operating working capital. Okay. And it's equal to your operating current assets minus the operating current liabilities. So what we're interested in, class, is not all of the current assets, not all of the current liabilities, but only the operating. Okay, because there are assets that are more financing in nature. So we're just interested in operating, because the bottom line here is that we would want to assess the performance of operations. Okay, so if we're going to assess operations, then we should distinguish it from the financing activities. Okay, and we should not charge operations with items that are beyond their control. So kunyari, let's say an asset, guys, is short-term investments or marketable securities. Now, that's not the role of operations. Okay, so operations yung receivables sa kanila yun, kasi receivables is from the generation of sales, di ba? Or inventory, okay, or even prepayments. That's the role of operations. Pero yung short-term investments or marketable securities, that's not a decision that's under the operations. So that's why we're making a distinction here between operating current assets and operating current liabilities. So let's work on this. Okay, so we're going to compute for the net operating working capital for 2020 and 2019. So the formula is how much is the operating current assets minus the operating current liabilities. So that's how we compute for the net operating working capital. Again, I'm getting a signal of unstable internet. Okay, so let's go to our balance sheet. Okay, based on the definition, guys, which of the assets here are considered part of operating current assets? Anyone? You have here four current assets. There's no prepayments. No? So of these four current assets, which should fall under operating current assets? Any guess, guys? I think I mentioned the answer a while ago, but I'd like to hear from you again. Any volunteer? Which of the assets here are considered part of operating current assets? Okay, Robert, yes?
Is inventories part?
Sorry?
Inventories.
Okay, inventories is one of them. Okay. What else? Okay, anyone who would like to venture also a guess? Thank you so much, Robert. Any other asset here that should form part of your operating current assets?
Sir, accounts receivable.
Yes, who's this, please?
Dianso po.
Who? Sorry, hindi ko nakita. Okay, is this Dominic? Sino ba to?
Dianso po.
Yana. Okay, Yana, thank you so much. When you answer, guys, kindly identify yourself so that I could acknowledge you. So you're correct, Yana. It's accounts receivable. Tama. Accounts receivable is part of operating current assets. What else? We need to identify which of these are part of operating current assets, because we're going to compute for NOWC, net operating working capital. So the first step is to identify which of these are part of operating current assets. Any other asset, guys, which is part of operating current asset? It is, guys, it is. Yeah, yes, Beyonce.
Sir, is it cash and equivalent?
Yes, correct. Thank you, Beyonce. You're correct. Cash and cash equivalents. Okay. Any other asset, current asset, guys? How about short-term investments? Should this form part of your operating current assets? The answer, guys, is no, as I mentioned a while ago, because the operations does not have control over this. This is a decision made by financing. Okay, so we cannot assess operations if they have no control over that account. Accounts receivable, definitely they have control of that because that's part of the operations of the business, selling, okay, generating sales. Inventories also, and also cash and cash equivalents. So of these four current assets, 3 of them form part of your operating current assets. Okay, so we can now compute, guys, for our operating current assets. Let's go here. Okay, so so this is equal to, so let's use the sum function, sum. So we're adding, what are we adding, guys? Sum of your cash and cash equivalents, comma, your accounts receivable and inventories. Okay, so those 3 items, guys. Okay. Any questions about that, guys? Is this clear? Sum of your cash, receivables, and your inventories. So you have, you should be getting 991. Okay, let's just follow, guys. Let's just add 1 decimal place here so that it's consistent. Okay, I'm adding 1 decimal place. Okay, there. So that it's consistent with the other figures here. Okay, then can we copy this, guys, to the right to compute for the operating current assets for 2019? Yes or no, guys? So this is the formula. If I copy this to the right, will I be able to compute for operating current assets for 2019? Yes or no, please? Answer, please, guys. Yes or no? If I'm going to copy this formula to the right. Okay. Yes. Okay. Yes, that's correct. We can copy this formula to the right. Okay. So let me copy this to the right. Oops. Okay. So this will be our operating current assets for 2019. Now let's identify the operating current liabilities. So we go to the liabilities. Okay. So our current liabilities include 3 items: accounts payable, accruals, and notes payable. Okay, so which of these, guys, should form part of our operating current liabilities? Okay, accounts payable, guys, is generated in the course of the operations of the business. So this is part of operating current liabilities. Accruals, guys, is also part of your operations. What are accruals, by the way, guys? What are accruals? Anyone? What's an accrual? What did you learn in your accounting? Okay, accruals are, so these are expenses that already have been incurred but not yet paid. Okay, so for example, power, utility, electricity. What happens is that you use the electricity first and then you get the bill for that. So you have already utilized the electricity, it has already been expensed, but we have not yet paid for it. So that's an example of an accrual. Expense that has already been incurred, but not yet paid. Okay, so this is part of operations. And how about this? Notes payable, this is interest bearing. Notes, when you say notes payable, there's an interest attached to this. And usually, guys, if it's interest bearing, it's not part of operating activities. It's part of financing. Okay, so of all these three, current liabilities, accounts payable and accruals are part of operating current liabilities, but this one is not. So only the first two. Okay, so let's now compute for the operating current liabilities here below. So this is equal to sum of your accounts payable and accruals. Okay. All right. So let me copy the format for this. Home format painter. Okay. And we can copy this to the right, guys, because just like a while ago, okay, the position of the cells are such that they're also side by side. So since this also is side by side, then we can copy the cells. Okay, therefore, the net operating working capital is this one minus this one. Okay, again, I'm going to copy the format of this one. 1 decimal place. Okay. Okay, any questions so far, guys? Any questions about net operating working capital? Okay, why do we need this, guys? Because we would be needing, the bottom line is that we would want to assess the performance of operations. Okay, so we're doing the building blocks, guys, of assessing whether operations was able to perform well. Okay, the next, guys, is TOC. TOC is net operating working capital plus net fixed assets. Okay, please take note that this is net fixed assets and not gross fixed assets. What are we given in our balance sheet? What we're given in the balance sheet is our net plant and equipment. Now, what did we learn? What did you learn from your accounting subject? How do we generate the net? So this is net PPE, net property, plant, and equipment. How do you compute for the net property, plant, and equipment? Because here, okay, what usually happens is that in the balance sheet, you'll find this, and then there will be a note to this, note 1, for example, and in the notes to the financial statements, you'll find here how the net PPE was arrived at. Okay, how do you compute for the net PPE, guys? Okay, where did I put that? Oops. Where did I put the net PPE? Okay, it's here. Okay, let me put it here. Okay. Anyone, guys? How do we compute for the net property, plant, and equipment? Okay, so let me just answer this. PPE at cost. Okay, you start with PPE at cost. So this is the acquisition cost of your property, plant, and equipment. And then what do you subtract from it, guys? What is subtracted from PPE at cost in order to arrive at net PPE? Subtract. Anyone? So this is an accounting. Yeah. Somebody raised her hand. His hand. Yes, Robert. Sorry.
Depreciation.
Oops. Hello.
Hello.
Yes, Robert. Yes. Sorry.
Depreciation po.
Depreciation. Okay.
Expense.
A depreciation expense.
Accumulated depreciation pala.
Yes. Okay. You're correct. Kasi ang depreciation expense, you don't find it in your balance sheet. You find it in your income statement. So what you find in the balance sheet is your accumulated depreciation. Accumulated depreciation, I'll just shortcut it, and then PPE. Okay. What kind of account is this? What do you call this account? Accumulated depreciation. It's called, there's a name for that, guys. Okay, those are that's the acronym. It's what? It's the, another example, allowance for doubtful accounts, allowance for bad debts. What do you call them? They are, what did you learn in your accounting? How do you call them? Itong accumulated depreciation na to. Okay, take note, it's always attached to your asset. Okay, that's a clue, guys. Ano yung C dyan? This will not exist independently. It's always attached to your asset. Just like allowance for bad debts, allowance for doubtful accounts. It's always attached to your receivables. So what's this, guys? They're called what? Of course, the A here is your, yes, Leanne, thank you.
Sir, can I just try? Was
Yeah,
it
sure.
Is it contra asset?
Yeah, thank you. You're perfect, Leanne. Thank you so much. That's correct. This is called your contra asset account. Okay. Let me just write that, contra asset account. Why is it called contra asset? Because it's always attached to an asset. Okay. Accumulated depreciation is a contra asset account. Okay. So for example, guys, if the PPE was, let's say, for purposes of example, 1,000, and if now, okay, let's say it's 1,500, and if the accumulated depreciation is 500, then what's presented in the balance sheet is just the net. So it's arrived at by getting the cost of the asset and then subtracting the contra asset account to it. So there goes the 1,000. Okay, so net PPE is 1,000, and usually you'll have notes here. Notes, okay, say example, note B. And under note B, you will find this in the notes of the financial statements for full disclosure. Okay, so we have to know how much is the cost. How much was the acquisition cost of the property, plant, and equipment? Okay, and usually nakalump yan, guys. No? Because there are usually several types of, there's machine 1, machine 2, land, building. So that will appear in, in the notes. You will not find it here in the balance sheet because that will make the balance sheet very, very long. Okay, so usually you just have here either this one, either these three, okay, or just this one, net PPE. And then there should be a note there, and then it will define what are the PPE and their corresponding accumulated depreciation, and then the total. Okay. Okay, so where were we? Okay. All right. So here, guys, we have your, it's almost time. Let's just finish this, guys. Your TOC will be your NOWC. We already have it, right? Okay, we can just copy it. So let's copy it to the right. Okay, add 1 decimal place. And then your net fixed assets, guys, we will just get it from here. Where's our net fixed, net PPE? This one. Okay, we just copied it there. Okay, let's change this, net, let's call it, just to be consistent, net property, plant, and equipment. Just to be consistent with the account being used. Okay. All right, so I'll also copy this to the right. Okay, therefore, guys, our total operating capital is equal to the sum of the two. Okay. Okay, and for this last one, guys, it's time. So let's just compute up to investment in TOC. The TOC in 2020 was 1796.2. The TOC in 2019 was this one. So the net investment in TOC is just the difference. So 280 million was additional investment in operating capital in 2020. Okay, why did I put this here? Okay. Sorry about that. Okay, so with that, guys, we end our discussion for today. Oops. Okay, let me just change this. Okay, so we ended here. I'll just put here a note discussion ended October 27, so that I'll know, guys, where we ended. Okay, thank you so much, guys, for your patience. I'll stop recording now. Okay, stop.